Hi all, good morning. Welcome back to Commerce Veda. It took a week because of hectic schedules and on the request of few of my students, today I want to record a video on the basics of amalgamation. The basics of amalgamation. Before going into the accounting standard, which is AS 14, we should first understand what is amalgamation and how it works. What are the steps to be taken care while reading and solving a problem on amalgamation? Basically, what is amalgamation? This is amalgamation of companies. So, there are two types of understanding of an amalgamation. Suppose say there is A Limited and there is B Limited. Now, A and B Limited wants to form a new company called AB Limited, where A loses its existence, B also loses its existence, and the new company incorporated, which is called AB Limited. So in this case, A will die, wound up, B also will die, and the new company AB Limited comes into existence. This is amalgamation, one type of amalgamation. And another is when there is A Limited and there is B Limited. A Limited acquires B Limited, wherein B loses existence and A continue as an amalgamated entity. So generally this is called as merger, not in the nature of merger as per AS 14, and this is called absorption. B absorbed by A and A and B merged into AB. But according to AS 14, it says amalgamation includes absorption. So while we are dealing with the sums, this is also amalgamation and this is also amalgamation. So to be called as amalgamation, what we need is, we need two different companies. One is the company which is selling and the company which is buying, or we can call it as transferor, transferee, or one more name is here amalgamating and amalgamated. So selling company, transferor company, amalgamating company, whatever the name you give it, this company losing its existence. And buying company, transferee company, amalgamated company means this company is what? Continuing the operations, or newly formed to continue operation, to carry on operations. So we have two different names given: amalgamating, amalgamated. Amalgamating company is nothing but the company which is selling, losing its existence. We call it as a transferor company. Amalgamated company means here the buying company or transferee, or we can call it as the company which is acquiring the business of another company. To brief about this, what we should understand here is, either two existing companies loses their existence, forms a new company. This is amalgamated company, and this is amalgamating company, 1 and this is amalgamating company 2. But these two are getting amalgamated into a new company incorporated for the purpose of amalgamation is AB Limited. One case where these two are losing and one is newly formed to continue the operations, to carry on the operation, carry on the merged operations. Wherein here, this is existing company, this is existing company, but this company is still continue, but this company gets into this. A Limited buys B, so B loses the existence and it will become a part of A, no change in name. A will continue, either change in name or no change in name, but this is already a legal entity, not newly formed. So B comes into A and A continue as a amalgamated entity with the business of both A and B. So and AS 14 says amalgamation includes absorption. We will see where AS 14 comes into applicability only when we go up to that, not in the basic session. And the different names were given for transferor, either you call it as selling, transferor, amalgamating, and transferee, we call it as buying, and transferee and amalgamated company. So these are the basic understanding of amalgamation, where what we need to do in amalgamation is very, very important here. Exactly, students, what exactly they do when they look at amalgamation problem or when they start learning amalgamation, we learn the basic understanding of what is seller, who is buyer, what is selling company, what is buying company, what is transferor, what is transferee, and what is what we can say amalgamating company and amalgamated company. This is a basic understanding. Right now, the major things what we should do, number one is computation of purchase consideration. What does it mean? This is nothing but amount paid or payable to the shareholders of amalgamating company. In brief, we learn in detail definition of purchase consideration, but in general sense it is amount paid or payable to the shareholders of amalgamating company. Now shareholders, these are the owners. Now shareholders includes here, I didn't say equity or preference separately. Whenever the word shareholder comes, it is equity and preference. If I say equity, then only equity, preference, then only preference, but I use shareholder. Here it is both equity and preference. So amount paid or payable to the shareholders of amalgamating company in cash or in kind. Kind here means shares or debentures. Any form of amount, right, whether in cash or in the form of shares or in the form of debentures, paid or payable to the shareholders of amalgamating company, nothing but which company? Transferor, or we can call it as seller or selling company. So amount paid or payable to the shareholders of the amalgamating company is called purchase consideration. That is the first step to start any problem on amalgamation. We will discuss in detail about what is purchase consideration in the subsequent sessions where we discuss only on purchase consideration. Now coming to the next step, once you decided the purchase consideration, next thing what we should do is closure of the books. of amalgamating company. This is transferor or seller. So closure of the books. Why? Why? Because this company is no more into existence. We should close the books. We should transfer the assets and liabilities of this company, either transfer to the buyer or settle, whatever the way the scheme of amalgamation is drafted. But ultimately, this company should be zero. The balance sheet of this company should be made zero. No assets and liabilities should be there after we complete the second step called closure of books of amalgamating company. There is a process to close the books of amalgamating company. How to close? What are all the journal entries to be prepared? What are all the ledgers to be prepared? That we are going to learn in the subsequent sessions on this step. So the first step what we discussed is computation of purchase consideration. The second step what we do is closing the books of amalgamating company. And the third step, once you close the books of amalgamating company, then you should see incorporating the assets and liabilities taken over in the books of transferee, or we can say amalgamated company, or we can simply say buying company. The company bought what they bought. They bought the assets and liabilities of the other company. The amalgamated company bought the assets and liabilities of the amalgamating company. So now I should incorporate those values in the books of the amalgamated company. That is called the buyer. In the buyer books, we should incorporate all the assets and liabilities taken over. As I said, they can give the assets and liabilities in full to the buyer, or they settle some and transfer the balance depending upon the scheme of amalgamation. So we should understand the scheme. Now you'll ask me, sir, how do I understand the scheme? Every question after the balance sheet of both the companies will give you certain conditions. Those conditions are as per the scheme of amalgamation. Reading the scheme, you should know which assets are actually transferred, which liabilities are actually transferred, and which are settled by the seller. So whatever the assets and liabilities which are transferred to the buyer shall be incorporated in the books of amalgamated company shall be my third step. While doing the third step, I'll get the applicability of AS14. AS14 comes in third step, where I need to apply. Not only in third step, also in first step. In computation of PC also AS14 comes, but it won't come here. AS14 has no application on closing the books of amalgamating company, but AS14 applicable in computation of PC, because who computes PC? Basically the buyer. So whatever the things buyer does, AS14 is applicable. Whatever the thing seller does, seller is winding up. So it is generally a realization method of accounting we should follow. Why? Because the seller is no more a going concern. We should apply the method called realization method that we will discuss when we discuss in detail about the second step. So third step is incorporating the assets and liabilities of the selling company which are taken over by the buying company in the books of the amalgamated buyer or transferee. So after this step, the fourth step shall be preparation of balance sheet and notes post amalgamation, or we can say immediately after giving effect to the scheme of amalgamation in the books of transferee. So I should prepare the balance sheet of the transferee immediately after giving the effect to the scheme of amalgamation. These are all the four important steps which we should do while answering a problem. However, the problems in this chapter might be in many ways. Number one, it may ask you to only compute purchase consideration, or it may ask you to close the books of amalgamating company, but to close the books of amalgamating company we always need to do this, because the entries in the books of amalgamating company dependent on the value of consideration they receive, right? And they also may ask you to incorporate the assets and liabilities in the books of transferee and prepare balance sheet after amalgamation. It can be a combination of all. It can be a combination of all, or 1 and 2, or 1 and 3, or only one. The only one, or 1 and 2, or 1 and 3, or combination of all. So it can be asked either only to compute purchase consideration, or compute PC and close the books of amalgamating company, or compute PC and incorporate the assets and liabilities taken over in the books of amalgamated company and prepare the balance sheet after amalgamation. Any combination depending upon the weightage of the marks given to the particular question. So this is the basic structure of understanding amalgamation accounting. Clear? So what we understood today is, what is amalgamation? Either A and B merged into AB, where B loses its existence, A also loses its existence, and A and B newly incorporated to start the business with the assets and liabilities taken over. Or A and B, A acquires B. Here B loses the existence, A continue to carry on the business with the assets and liabilities taken over from B. This is technically called as absorption, but as per AS 14, amalgamation includes absorption. So we do accounting as if it is amalgamation only, where we close the books of transferor, seller, amalgamating company, and we incorporate the transferor assets and liabilities taken over by transferee in the books of transferee as per the scheme of amalgamation. And we apply AS 15 in computing purchase consideration and incorporating the assets and liabilities taken over in the books of amalgamated company. This is the introduction to amalgamation. Let us understand what is purchase consideration in detail in the next session, which is on only and only on purchase consideration, with the explanation, definition, formula, methods, and with few practical solutions. Until then, see you back. Thank you. Meet you again.